Hey everybody, welcome to this video. I'm going to do a little bit of a different take here. I've got some questions about the U.S. taking over a 10% equity stake in Intel and Trump's latest corporate move. This is a headline from Reuters News. But the question was, is this something has this happened before? Has the U.S. government taken over or taken stake in private equity? And then I'm going to get into, do I think that this is a good idea based upon Intel. So I'll just give you my own personal perspective on Intel at the end here. So today we're tackling a rare but fascinating topic, times when the US government actually bought stakes in US private companies. So from economic meltdowns to national security plays, these interventions have saved industries but sparked huge debates. So we're going to kick this off in the Great Depression in 1932, actually under President Hoover and the Reconstruction Finance Corporation. It was born to bail out failing institutions. Expanded by Roosevelt, it poured 1.17 billion into preferred stock of over 7,000 banks and trust companies from 1933 to 1945. At its peak in 1935, the RFC controlled nearly 40% of U.S. bank common stock equivalents. They also invested in railroads and other firms to keep the economy afloat. Most stakes were sold off as things stabilized, a classic lender of last resort move. This set the stage for future government rescues. And then in the 1980s, in 1980 we had Chrysler, which was on the brink. The government stepped in with a 1.5 billion in loan guarantees under the Chrysler Loan Guarantee Act. In return, there were warrants for 14.4 million shares of common stock. They sold them later for a profit of $311 million. So a lot of times when the government gets involved with these uh, projects, they actually do make money. They are profitable. And the Federal Reserve was actually profitable for a long time on quantitative easing until just very recently. Then in 1984, the Continental Illinois, the seventh largest bank, faced collapse. The FDIC injected 4.5 billion, including 1 billion in preferred stock, grabbing 80% of the stake temporarily. It was restructured and sold, with the Feds recouping most of the cash. These were the early signs of how far the government would go to prevent systematic failures. Now let's fast forward to 2008. The big one, the 2008-2009 financial crisis, where you got the TARP situation, um, troubled asset release program, which was $700 billion authorized at the time. The Treasury bought 250 billion in preferred stock from hundreds of banks like Citigroup and Bank of America, plus warrants. Most were repaid in profits by 2010. And keep in mind, quantitative easing was also going on in the background here to boost the stock market in March of 2009. Freddie Mae and Fannie Mae and Freddie Mac got 191.5 billion combined for senior preferred stock, and AIG a whopping 141.8 billion led to a 92% stake sold off uh, by 2012 for a 22.7 billion dollar gain. So there was a always there's selectivity going on there. Obviously, they just let Lehman go under, but they came in and rescued certain companies during that time. In autos, GM General Motors received nearly 50 billion for a 60.8% stake, sold off in 2013 for a $10.5 billion loss. Chrysler got 12.5 billion, leading to an 8% initial stake and exited with a small loss. So these moves prevented total collapse, but raised the too big to fail concerns. And then there was COVID during the 2021 COVID crisis. The CARES Act funneled over $50 billion to airlines and key businesses. Public companies had to give warrants options for shares worth of 10% of aid. Think United, Delta, American Airlines. In 2024, the Treasury auctioned these off for 556 million. It was all about keeping essential services running amid lockdown. So there is clearly a precedent for this, but most of the time, what we're seeing here, the pattern was during financial crisis times. That's the pattern. Now, recently here, just a week ago, just this week, August 22nd, the Trump administration announced this 10% stake in Intel via the 8.9 billion purchase of common stock. This converts to 5.7 billion in unpaid CHIPS and Science Act grants, plus 3.2 billion more into equity. So there was something there already that they were using to purchase this. It's a passive investment with no general voting rights, aimed at boosting U.S. chip manufacturers against China. Critics call it government overreach, but supporters see it as vital for national security. With prior 2.2 billion paid under chips, total support hits 11.1 billion. So this could be a new era for tech interventions. And the interesting thing about this one uh, is is that this was not a reaction to some type of a crisis. This was actually like a proactive involvement by the government. Now Intel is a strange company just because I'll give you my personal view on this. I had some personally I had some trouble with Intels recently. I had purchased a bunch of Intel chips for servers, and there was a scandal that actually happened recently. And so they were trying to catch up with AMD, and they weren't able to. So what they did was they started overclocking their chips on these servers, and I personally got caught up in all of this, and it caused their chips to completely go bad. And so there was a few years here where the Intel chips had just gone completely bad, and I kind of did a little bit of a of a research here for you just to kind of give you the official background on this. But essentially, what we saw here in these Intel chips was that after about a year, the chips would start to collapse and start to go bad. And this was all because this is I just did a little summary here on AI, but there was many things that were going on here. So this was called the overclocking scandal of 2024, when widespread reports of stability issues, degradation, and crashes affecting its 13th and 14th generation Raptor Lake desktop CPUs. And it wasn't just these CPUs. I had purchased a bunch of chips. We were building servers to optimize trading systems, and these things started going really bad after about a year. And I had noticed this with a lot. It wasn't just this chip series. I had to go back to. I have a computer here as old as 2010 that's running an old Intel chip, and that one's running still pretty good. I'm actually running it on this computer. But everything after that, these chips started going bad, and they weren't telling people what happened. It was kind of a crazy thing because they got together with the motherboard companies, and they set these voltage speeds to be really high. Why? Because they couldn't catch AMD. And so so what happened was the chip would be fine, and then in about a year they would all start to go bad. So I would have all of these stability issues, and I thought, oh, I'm just running too much data in these servers, and it's just crashing because I'm so much bandwidth on my optimizations. That's not what it was. It was Intel purposely overclocking their chips and literally burning the motherboards and the chips out. And so there was many of these things. It was voltage instability, motherboard manufacturer settings. So they got together with the motherboard companies, and the motherboard companies actually set the default standards at overclock. So all of these chips start going bad, and then they had an oxidation issue where there was corrosion in the chips. So I went through this whole thing with there's a class action lawsuits going on against Intel about this, and I actually they refunded the chips. I sent the chips back, and they gave me my chips back, and I switched to AMD. Ever since then, I haven't had any problems with AMD. The AMD has been running great. So, you know, does that mean the Intel chips are bad, or they were just overclocking them to try to keep up? I don't know. I mean, the oxidation corrosive issues are something that could be a bigger factor, but I know personally for me, based upon getting burned by Intel, I will never go back to Intel ever again. These AMD chips that I'm running are fantastic. I don't have issues. They're stable. Don't have any issues. And the thing about AMD is they build these chips so they can be replaced in the chip socket. And just taking a look at the actual stock of Intel, this is a curious company just because the company has basically been running sideways for years. I mean, literally years. This stock has just been going nowhere. And so I know it's really weird. Intels are in all of these computer products, but and I had never gone to AMD. I had got the first AMD Athlon 64-bit processor when it first came out, and they used to run super hot, so you had to get all of these special cooling systems. But to me, I would much rather have AMD chips or have a stake in AMD than I would Intel, based upon all the issues that they've had recently, and just the fact that this stock has really gone nowhere, going all the way back to 2000. It's a strange stock. It's just kind of going sideways. So it's not necessarily risky from the government standpoint in the sense of it's not like they're buying tons of Bitcoin or something speculative. They know what they're getting. They're getting the chips. But for me, the latest rounds of problems with Intel definitely puts this into question for me. I wouldn't have done this. I would have done this with AMD if it was me personally, but that's my preference, and those are my recent experiences with Intel. All right, guys, so that's it for this video. I hope you enjoyed my quick summary here about the history of government interventions and then Intel and their recent problems. But let me know what you think in the comments below. Make sure to like and subscribe, and I'll see you the next time.